This is the FFR Trading Market Minute for January 30th of 2026. And again, we're looking at the SPY, the ETF for the S&P 500 on the daily chart, starting out here anyway. And you can see, we were expecting volatility. Last week I posted that, look for some explosion in volatility here. And, yesterday we had our Fed announcement. This was Wednesday right here. Fed doesn't move on interest rates, stands pat. Many analysts, believe that the Fed, this current Fed, Jerome Powell, is done raising interest rates. And you can see the market is tanked. I know NASDAQ's down over 2% right now. We've come down all the way down to the 20-period moving average. We're trading below that now. Now we'll have to see how we end up by the end of the day. We may kind of move back up, get some rally, and move back up to that moving average. We'll see. The oscillator here is heading in the oversold direction. It's not yet. You can see here's where it was below 5 at this point. Nice buying opportunity there. We also have this, I just drew this little rising trend line here, and that kind of intersects with some support right here. So the next downward support right around that 680, 681 level there, and then another level below that. But we'll see if this does get overextended and we get that maybe a buying opportunity. We'll see. But we do have to be careful because remember, we're another day from ending the month here, and we've talked about on the monthly chart, there is a warning sign here. If you look at your Buffett indicator, the market is strongly overvalued here. The Shiller PE ratio is I think is around 40, which 30 is a warning signal, and we're at 40. I think the all-time high was around 44, and that was a crash in 2000. And you can see on the monthly chart, as the oscillator peaked here on these months here, we continue to move high and made a new all-time high. But you see our oscillator, the RSI, has not followed the price. Now we still have, another couple days before the month closes out and before this print. So we'll see what happens here. But, we're in danger of potentially closing the month negative. We'll see. It hasn't happened yet. Got a couple days there. But this is kind of bigger picture stuff. Now this is, bigger picture stuff. So it may take a while to play out, months to play out. But this has got to be in the back of your mind because we had that same divergence in the last crash here. There's about a 30% decline in the S&P, and same thing, right? We had the RSI above 95 on this month. The market continued to move higher over the next few months, but you see the oscillator was not following, right? Not following, kept making lower highs, and we had a nice pullback there. So, keep an eye on this. Doesn't mean you can't have your intraday and day trades and so forth, but bigger picture, over the next several months, this is going to be kind of a critical period here. Economic data scheduled for next week. We kick things off Monday, February 2nd with the ISM Manufacturing PMI at 10 a.m. Wednesday, we've got ADP employment change and then ISM Services PMI. And Friday, average hourly earnings, the big non-farm payrolls report at 8:30 and 10 a.m. Michigan consumer sentiment. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.